Hey there, everyone. Dave Keller here with Market Misbehavior, and welcome to our latest episode of the Market Misbehavior podcast. It's great to be back with you here. We took most of the month of August off from the podcast as we were doing some personal family vacation sort of things. Now we're back to school. Kids are where they need to be, and Dave is interviewing some top market practitioners yet again. As a reminder, goal of this podcast is to sit down with the best investors, traders, strategists, technical analysts, whoever I can sit down with and understand a little bit more about their process, their ways of thinking, their routines, their decision making, and what they're seeing and hearing and thinking about the current market environment. Today I'm speaking with Larry Tentarelli. Larry is the editor of the Blue Chip Daily Trend Report. I've interviewed Larry a number of times over the years, although it's been a little while since we caught up last. I think of Larry as just a classic stock picker. He has a toolkit based on classic technical analysis tools. As you'll listen to our conversation, you'll hear us talk about trend following, talk about moving averages and how they help you understand the power of trends, relating the macro themes to the micro themes, right? How to think about seasonality and macroeconomic conditions, jobs data, inflation data, the Fed, versus what we're seeing on price charts. And that's a balance that I often try to strike in my own work. And I really loved Larry's description of how he thinks about that in his own process. Talk about scaling in and out of positions, and I really appreciated toward the end. Larry was very generous in describing how he thinks about partial positions, right? Where you would take an initial position, where you might be a little more patient and wait to see an idea be validated before you would add to that position. I think that's a really sort of an appropriate and arguably advanced way of thinking about positioning. So many individual investors think about, I own 100% of something or I own none of it, right? Do I own it or not? And that's it. And what Larry sort of brings to light is that there's a lot of levels to that, right? You can own a little bit of something or a lot of something or somewhere in the middle, depending on your conviction, depending on how the technical picture evolves. And I think that was really helpful. Some great comments, a fantastic analogy about what the markets are doing here in August into September. I'll let Larry describe his car racing analogy, but I hope you enjoy that one. And just this discussion of moving in his own experience from randomness to routines. And I think that's a great way of queuing up a fantastic conversation here with Larry Tentarelli. So please enjoy this discussion with technical analyst and market practitioner Larry Tentarelli, editor of the Blue Chip Daily Trend Report. Super excited to be catching up here again with Larry Tentarelli. Larry's the editor of the Blue Chip Daily Trend Report. Larry, it's been so much fun to interview you over the years. This is my first time having you on the Market Misbehavior podcast. Good to reconnect. Good to have you on the show. How are things with you?
Dave, great to see you. I'm glad to be on with you. Everything is going well. How about with you?
No complaints. No complaints. I should let everyone know you and I finally met in person. We've had a virtual relationship for many years, but excited to talk about these markets. I mean,
Sure.
I feel like there's our cup runneth over with things we could talk about with everything happening as we rotate into September. But to start out with, for those that are less familiar with you and your work, talk about this. I think of you as sort of a classic technical analyst. Like you have a very
Right.
straightforward approach, but it's very accessible. And I feel like people that are not as chart oriented probably can easily pick up a lot of the themes that you talk about. How were you introduced to technical analysis? What was that journey from you being an investor in the wilderness and then learning about charting? Like, what was that moment for you?
Great question. So it really started back in 1998. That's when I started actively in the markets. I was a broker with Merrill Lynch down in Boca Raton. And,
Yeah.
and that's when I really got actively involved in investing and in the markets. And the way that it really led me to technical analysis was I made a lot of money in that dot-com boom. And then I lost all my money in the dot-com, but I lost all of it, right? So, my trading account, my investing account, and all my favorite stocks, Cisco and Nortel Networks and Sun Microsystems, trees were going to grow to the sky. And it just
Wow.
went bad. The NASDAQ went down 80%. Some of my stocks went down 95%. I lost a lot of money and, took my beating. And so I backed off for a while for trading and investing, partially because I had no money left. And but after a couple months, I still had this passion for the
Yeah.
markets. I still had this love for the markets, and I've always had that passion for the markets as long as I can remember. So I started to read and I started to study, and the key thing that I wanted to figure out is, where did I go wrong? How did everything go bad? And what could I do in the future? Because I wanted to get back into the market. I wanted to remain as an investor and as a trader. So I wanted to learn where it went wrong. And I read different books, I studied everything, and I came across technical analysis. I think it was 2004, and I
Okay.
think it was Michael Covell's book Trend Following,
Oh yeah.
which really opened my eyes to technical analysis. No news, no fundamentals, things like that. So I started to study moving averages, and what I noticed, just really as a beginner in technical analysis, the one thing I realized is all my stocks that went bad, Cisco, Nortel, Sun Micro, all these stocks, if the only thing I did was sell them when they lost the 200-day moving average, I realized that I would have kept quite a lot of my money if I just learned when, how to sell. So that really started the wheels turning in my mind. And then it was a couple year process of reading, studying, back testing, experimenting with my own money. And it really started to come together for me 2007, believe it or not, right before everything went bad. And I actually got fortunate. I was short going into the great financial crisis. I traded it wrong, though. I overtraded. I was short everything. I got stopped out on the big rallies and things like that. But I at least started to get a good understanding for trends and how trends worked in moving averages. So really from '04 to about '08 was my transformation process into technical analysis.
It's so interesting, and I remember that you started in the late '90s. I started in June of 2000, and I feel like both you and I probably had baptism by fire, right? As
Right.
we're learning all about investing and sort of getting our feet under us as just everything is the huge rug pull, right, in the early 2000s. And
Bad.
it's funny to me now that I'm thinking about that, how well I think you and certainly this is how I think of it. You think of the benefits of charts for risk management, right? And
Right.
recognizing when something's not working anymore. To your point, right? Even just the simple process of looking for a stock breaking below the 200-day moving average prevents you from holding on to something way too long, right? And
Right.
letting your losing trades become your investments. I think that's really interesting. What were there any painful kind of early lessons? Was it that early 2000 period where you started to feel things rotate lower? What when you're thinking back, what's an example of one of those kind of painful lessons that helped shape you into the investor you are today?
Well, I remember like it was yesterday. So I was a broker, and JDS Uniphase was the big stock back in the day.
Right.
And we all made, well, I think it went up some kind of crazy number, like 20 or 30x in a couple year period. And, I was in it, my clients were in it, all the broker, everybody was in JDS Uniphase.
Yep.
And I remember one day that the stock was going down so fast that my quote machine on my computer at Merrill Lynch couldn't keep up with how fast the stock was going down. And it's the first time that I really remember being in a cold sweat, sitting in front. And Dave, I was literally, it was going down so fast, and me and all my friends were a little, shell shocked. But I can literally remember like the blood draining out of my head watching the stock going down. I was trying to figure out what's going on, and that I'll never forget that.
I know what's so funny that it's a very visceral, very physical description you just had of the reaction. I know
Yeah.
this is a little bit later, but I know for me, this is like 2008, 2009, sort of the great financial crisis. And I had just moved up to Fidelity in Boston. And I will never forget sitting in one of my analysts' office. Three of us are just watching the Bloomberg terminal, and just everything was red. And not
Yeah.
just kind of red, but down, I mean, red significant. And no one was talking. We're all just kind of looking at the monitor, just kind of trying to process what was happening. And I realized that that, like, there's just wasn't anything you could say as you looked at things rotating lower. So those
Yeah,
formative experiences of a significant downturn certainly seem to shape who we are. So
sure.
with that as a background, Larry, how would you describe your technical analysis process today, right? What is your, you do such a fantastic job of identifying constructive charts that seem to have a good setup. What is that process for you of identifying the next kind of leading names?
So I'm a trend follower.
Yeah.
And the key thing that I look for, just very simple, the price trend. I'm looking for higher highs, higher lows, rising moving averages, basically trend following 101.
Yeah.
And what I found for me personally is I've experimented with almost everything over the years. A lot of back testing, a lot of real life trading with my own money and, oscillators and indicators and, everything. And what I found for me is that I've been most effective with, trend breakouts, longer term uptrends, using weekly charts and things like that. So I just basically, after, 25 years or so of looking at these charts, I mean, think about it. If you look at, let's say, one or 200 charts per day, which we
Mm.
probably look at more, as we do our screening. But over time, that's a couple 100,000 charts that, that I've looked at, that you've looked at. And over time, I just by looking at a chart, I can tell if it's a trend that I want to have any interest in, if it's a stock that I want to avoid. And one of the big things I think that's really worked for me over time is back in the days, like 20 years ago, I would spend all day just looking at random charts. And I would ask myself,
Mm.
does this stock look like it's going to go up? Does it look like it's going to go down? And that led to a lot of randomness for me. So basically,
Mm.
what I put together is, what is my ideal chart? What is the model chart that I want to be involved in? And when I go through my screeners and, run my scanners, if a chart doesn't fit that process, then I eliminate it. I don't worry about if I'm going to, miss the bounce or miss the bottom, or I don't worry about the charts that I'm going to miss. I just stay focused on getting involved with the charts that I've had, a high success with in the past.
Oh, that's really well said. And that description of going from randomness to more routines makes a ton of sense. I feel like that's a trap a lot of individual investors sort of struggle with, is they never get past that randomness stage, right? They're sort of stuck in this
Right.
random, process. It's not really a process. It's just sort of by accident that you seem to find good names. You strike me as someone who has good routines, good consistent ways of finding ideas, and that's probably served you quite well.
Sure.
So, I mean, with that in mind, right? I mean, talk to us about the current market environment, right? The S&P 500 has had an incredible run off of the April lows, stalling out in some ways. And we've certainly seen some of the leading names like NVIDIA, Broadcom, and others pulling back in August. Now we're setting up in September. Start high level for us. I mean, what are your sort of high level thoughts about the market conditions here now, right after Labor Day, early September?
I think we're just having a seasonal pause right now. I think we all know by now September is historically the worst month of the year for the S&P 500. So I think you've got some headwinds there. There's a lot of uncertainty in the markets as far as if the Fed's going to cut rates or not. I expect that they will. So I was in the camp up until the Jackson Hole meeting a few weeks ago. I was in the camp that the Fed was not going to cut rates because inflation's still sticky. It's been going in the wrong direction. But Powell really threw a curveball. He came out very dovish. And I was ready for, 2022 Powell when he said we're going to have to endure some pain, right? And all my stocks went there. So I just, come Jackson Hole, I get into hunker down mode. And I'm like, okay, what's he going to say this time? And he came out very, very dovish. I was very surprised. So I think he's tipped his hand that the
Yeah.
Fed is going to cut in September, but there's still some uncertainty in the markets because you get higher inflation data than today. We got a lower ADP number. So I think you're just seeing some sector rotation since July 1st. There
Mm.
has been a sector rotation into cyclicals. Small caps, regional banks, home builders have performed very well.
Yeah.
Semiconductors are in a bit of a pullback phase right now. Some of your software stocks have pulled back quite a bit. So we've seen over the past 60 days or so a rate cut rotation as markets move into more cyclical sectors. So the S&P's held up well. Under the surface, though, there's been some opportunity.
It's there's a lot of really good points in there. We're looking at the chart of the S&P here just to sort of get, sort of set the table for a discussion about the macro conditions. You'd mentioned some of the macroeconomic data that's come out here, and that is coming out, right? We had some jobs data this
Right.
week, as you mentioned. Next week we've got CPI, PPI, we've got the Fed meeting coming out. How do you relate sort of the economic data that tends to be in the headlines versus just the process of following trends, right? How do you relate the macro to the micro when you're going through a series of charts every day?
So what happens is the chart is going to take a 90% precedent for everything that I do. I
Yeah.
do pay attention though to, potential potholes. So I know
Mhm.
when there's a Fed meeting, I know that tomorrow's payrolls number, based on how it comes in, could lead to some pretty wide trading ranges. So in a situation like that, I might not buy anything ahead of the meeting. Over the past few weeks, I've raised cash just a little bit. So I'm just under 10% cash right now. I've
Okay.
booked some gains and, partial gains in some of my winners and semis, nuclear, things like that. So I'm just being more defensive right now, but it's not a long-term trend change. It's not a change in my view. I'm not bearish. I just know that historically, September is a difficult month when you factor into that the fact that the market's not sure what the Fed's going to do. If for some reason, just hypothetically, if we get a big payrolls number tomorrow, which I do not expect, but if we do, then the market's going to have a little bit of it's not going to know what to do if we get a big CPI number next week. So these are things that can lead to shorter term volatility. So I want to be careful with new positions because I use stop losses on everything. And
Mm,
for my new positions that have fresh stop losses, I've just been a little more hesitant right now, a little
yeah.
more patient. Whereas my longer term positions that, might have a really big profit cushion in there, I'm not worried so much about the short term volatility, but I've done the least buying over the past 4 weeks that I've done since the April lows.
You'd mentioned the seasonality a couple of times, and obviously we're in a we're going from June, July, August, with which have been fairly strong. Particularly June and July have been fairly strong in recent years, but September has been almost consistently a weak month. How
Right.
much does that seasonal tendency of weakness in September, and then I guess seasonal strength Q4 obviously tends to be quite strong coming off of a major low. How much does that play into how would be positioned today?
It plays a lot into it. So
Yeah.
the way I look at seasonality is it's never a guarantee, but I think knowing what we know about the data set for September, I think it would be a little bit foolhardy to not have some caution into September. So I look at it as a racetrack. So if we're driving, my son's big into F1 racing, right? So you get the straightaway and then you get the turns. So on the straightaway, you can pretty much, gas it pedal to the metal. Once you hit the turns, you need to slow down a little bit. And I just treat September as a turn where I want to stay on track, but I just want to, a little bit less gas and a little bit more brake.
Um, You probably know, Larry, I've interviewed many, many people over the years. That's the first F1 analogy I've ever had for investing. That's awesome.
Oh, I
Thanks for
love
that,
my
Keith.
son's gonna love it. I'm gonna have to show him this video.
I love that one though. That makes a ton of sense, right? And
Yeah,
I've the analogy I've heard before is just sort of thinking of like headwinds and tailwinds, right? And
right.
John Kosar, who's a fellow technical analyst, he had described it as riding your bike with the wind behind you versus riding your bike into the wind. Like you can still make
Right.
progress. It's just a little tougher.
Right.
But I love that analogy with the straightaways and the turns. Kudos for that.
Thank you.
Um, let's talk about some individual stocks and some of the themes that are emerging here. And again, who better than the editor of Blue Chip Daily Trend Report to think about some of these major, these blue chips and some of the changes that they've had. Let's start with semiconductors. You mentioned the weakness that you've seen recently, and certainly we've observed, a decent pullback in stocks like NVIDIA. These are names that could do no wrong, through the end of July. and now have stalled out a bit. And by the way, I should let you know, I'm using a chart that you sent to me probably 2 years ago. So I hope this is still okay. I meant to
Oh,
ask you before
sure,
we
yeah.
started.
Chart.
It
Yeah, it's
seemed like a good
perfect.
classic kind of Larry Tentarelli look with price,
It
moving averages, volume, right?
That's it. That's it. And what I see on the NVIDIA chart,
Yeah.
so NVIDIA is in a long-term uptrend, rising 100-day, rising 200-day moving average. But what we are seeing is there is some consolidation. So if you take a look, you've got a two pennies of I'm sorry, 1 penny of a lower high, but you've got about $1.50 of a lower low. So you do have a little bit of a lower high, lower low, 167.22 versus 168.80. And then you've got two closes below the 50-day, and those are the first two closes below the 50-day going back to, it looks like, May
Mm,
of this year. So in my trend following process, when I see that close below the 50-day, that's
yeah.
just a yellow light for me. It's a little bit of a caution sign. So I have, over the past 6 weeks, I've booked partial gains in NVIDIA. I'm
Yeah.
still holding most of the position. I think it's a core long-term holding. But what I'll do is I'll trade around my core positions. So if I've got a core position in a stock like NVIDIA or a stock like JP Morgan, if it runs up quite a bit, I'll dial back some gains, still hold my position, but reduce it. And then if it pulls back considerably, I might look to add to it over the course of a few weeks or a few months. I'm not a short-term trader whatsoever. I'm not a day trader. I'm not a swing trader. I'm a longer-term trend follower. So
Mm,
I'm not trying to catch the exact high. I'm not trying to catch the exact low. But what you'll see if you look at the NVIDIA chart is it's testing, it's in a pullback phase. Whereas if you compare that to a stock like, say, JP Morgan, if
yeah.
you punch up the JPM chart for just a second, what you'll see with JPM is the opposite. So JPM put in a new all-time high today. You can see
Yeah.
it's over four rising moving averages. You've got a couple higher highs. That 284.71 was the higher low. So just from a trend perspective, the trend in these big banks and brokers, it's a stronger trend right now. So that's really what I look at. To me, they're long term, they're both in uptrends, but the JP Morgan chart has a lot more bullish momentum right now.
It's one of those things. I mean, with the strength, and it's not just J.P. Morgan, right? Morgan Stanley, it's some of the regional banks you mentioned. I mean, this is an area of the market that I think so many investors probably have been ignoring for a while. But when you look at the charts, pretty impressive, right? And I guess the
Sure.
question I would pose is, how bearish do I want to be about the market if banks are all breaking out to the upside, right?
Right. Right. If you dial up GE for a second,
Sure.
so to me, JP Morgan is the financial sector bellwether. And then if you dial up GE, that's the industrial sector bellwether. That's the biggest market cap
Mm,
in the industrial sector. And same thing, it's almost the same chart as JP Morgan, just under a breakout. All the rising moving averages just held the rising 50 days. So just like you said, how bearish can you be when GE is working on a breakout to highs?
yeah. No, that's a really good example. To bring another example, and this is, I guess, just a question. I mean, rotating to the commodity space, right? Gold
Sure.
has outperformed the S&P and the Nasdaq in 2025. Although in recent months, stocks have certainly outperformed off the April low. But year to date,
Right.
it's still been a remarkably strong space. We're seeing new moves to all-time highs for gold and silver this week.
Yes.
Looking at a chart like Newmont Mining, how much do you know? How do you treat a stock that arguably you could describe as fairly overextended? Right, I'm seeing the moving
Yeah.
averages you described very stretched. We're kind of way up there. How do you think about positioning? How do you think about adding to a position in a chart that's just been remarkably strong and just continuing to go up like this?
That's a good question. So I've got a position in Newmont, and I
Okay.
recently I booked gains in the GLD ETF and rolled it
Hmm,
into Newmont, I think at about $70 or so. And I'm just
okay.
holding the position right now. And the reason that I booked my gains in gold and rolled it into Newmont was I only wanted to have one gold position. Gold's really not a core market for me. And
Yeah.
I just, from looking at the charts, I expected I could get higher upside from the miners than from gold. Now, gold's broken out, miners have broken out. But a chart like this, it's extended in the short term, but the daily RSI, I think when we looked at it, I think that was, over 70, 75. So
Yep.
on a chart like this, if I wanted to start a position, I generally would start with half of a position because it
Okay.
is in a viable uptrend. It could be extended based on what we get, out of inflation news over the past few days. It could be choppy. So a chart like this, if I had it from much lower, and this is going to sound interesting, but it all comes down to position management. So if I had it from much lower and I wanted to, book partial gains, there's nothing wrong with that. If I had no position and I wanted to get into gold miners, then I'd look at maybe, a third to a half of a position and then see how it develops over the next week or two. So I think position management is based on what your position is.
Oh, that's so well said. And I feel like too many individual investors for sure, Larry, think about, basically you either own 100% of a position or 0%. It's just this binary thing. And I
Right.
think what you've described is a much more effective way of position management, right? Which is just thinking about, all right, a partial position. At this point, I
Sure.
add to it, right? And things like that. So I'm so glad you articulated how to use the charts along those lines.
One of
Um,
the
yeah,
biggest
go ahead.
things, one of the biggest tools that's worked for me that I've really implemented a lot over the years is just what you talked about, scaling in and out of positions.
Yeah.
Because, a lot of my charts, so some of my biggest positions, Palantir, NVIDIA, Meta, over the years, these have been stocks that were breaking out the highs. Robinhood, same thing. You look at the chart and you say, okay, the stock went from, let's say Robinhood, it went from 20 to 80. I had no position, but it's given me a buy signal at 80. So let me at least start with a partial position in the stock, and then I'll see how it reacts. I've noticed that when I'm in a stock, I tend to, once I get my position in, even if it's just a 1% position, once I'm actively involved in the stock, it's a lot easier for me to maneuver than if I have no position whatsoever. And, a lot of these stocks like Palantir, if you dial up the Palantir chart, my first buy on the website for Palantir was $34 in September of last year, which is all the way the bottom left-hand corner.
Right.
So I start it with, but at the time, the chart looked like it could have been overextended. It was making highs, and I didn't buy it at 21. Then it's up 50%. Now I'm buying the stock. So you go through these, mental exercises. But
Yeah.
if I get a chart that gives me a buy signal, I try not to let what I did or did not do last week or last month or last year impact what I do today, because what I did or didn't do has no influence on what the stock does going forward. So I started a small position in Palantir. It started to work, and then eventually it's become my biggest position. So I'm more comfortable, like with NVIDIA and Taiwan Semi, GE, Vernova. I've booked some gains in those
Hmm.
stocks because they went up quite a bit, but they're still, to me, they're in a long-term uptrend. But by the same token, I don't want to be in a position with the stock, like, a stock goes from 100 to 200. We don't take any money off the table. Then it comes down to 150. And then you're asking yourself, well, maybe I should take some money off. You go through these exercises.
Yeah.
So I found that by, moving small, scale in, scale out, I'm not going to get the very top. I'm not going to get the very bottom, but you can do well in the middle.
Oh, that's so well said, Larry. Thanks for expanding on that a bit. I really love that description of how you're sort of layering in and out of positions. Makes a ton of sense. This has been awesome to catch up with you, as always, Larry. I hope we can do it again. In the meantime, tell me a little bit more about Blue Chip Daily Trend Report and where people can find more about you and your work.
Sure. So the best place to find me on X, or Twitter, as we used to call it, you can see my handle there is at Blue Chip Daily. I post every day. I post for free every day, charts and ideas, things like that. My website is bluechipdaily.com. It's a subscription-based website. If you go there, you can see some of my work. I post daily best ideas. I share my portfolio alerts anytime I buy or sell a stock, and I discuss, why I did it. And I think it's good. We've got subscribers that are beginners. We've got subscribers that are professionals. We've got subscribers in the middle. And I think it's a good primer for those that want to learn about trend following.
I love it. Larry, this is awesome. I tend to describe you when people ask what your process is. I describe you as one of the best natural stock pickers that I've worked with. And you didn't disappoint today, as always. So thanks again. Thanks for joining us. Best to the family. And we'll talk again soon.
Dave, thank you so much. I really appreciate it.
It was a great discussion there with Larry Tentarelli, and I really appreciate his take. I mean, Larry really focuses his attention on those big U.S. listed names that you probably know, and I found Larry is really helpful at a couple things. Number one, just breaking down the trend following process and leaning into the fundamental building blocks of trend following, which I think a lot of his comments sort of spoke to that strength of his process. The second thing about identifying strong charts. I feel like anytime I talk with Larry, he can immediately share, here are some stocks that look constructive, right? He's never been unable to articulate that sort of thing. And it's a great reminder, friendly reminder that as I sign off my shows, it's always a good time to own good charts. And I think Larry is always a source of good charts out there, and just the ones that start to look constructive. And then finally, it's leadership rotation. That's why I thought it was a really great time to bring Larry on the show, because I feel like we've seen those signs of rotation, right? We've seen weakness in previous leadership in technology, stocks like NVDA pulling back as we discussed. We're seeing a resurgence in materials, in financials, in some healthcare names, in some industrials, and home builders. And I think those, investors often get into trouble when they just hold whatever was working in the last cycle and they ignore the signs that things are changing. And I think we're seeing signs of change here as we go back into back in school mode in the Keller family. I think you probably would agree with me. We're seeing signs of a change here. In terms of market structure. Really fun discussion. Thanks again to Larry Tentarelli joining us on the show to share some words of wisdom and some great market observations. That'll do it for today's episode. By the way, if you like what you heard here, if you want to be able to upgrade your own decision-making process, move more from randomness to routines, as Larry said so well, I hope you'll consider our Market Misbehavior premium memberships. Planning a lot of great upgrades to the premium memberships here through the remainder of 2025 into 2026, and I hope you will be a part of that as we grow the premium membership. 3 great benefits remain. Number 1, education. We'll teach you all about technical analysis, behavioral finance, how to analyze the markets, how to improve your decision making by addressing those behavioral biases that are bouncing around in your head on any given trading day. Number 2, reports only for our premium members. Our weekly flight plan, where we write out some of the key themes that we're focused on. Our monthly chart review, which we just put out for the month of September, where we talk about market conditions, some longer term trend changes and how they evolve. You will also have full and immediate access to our third benefit, our virtual courses. We already talked about the virtual courses. We also have our members-only community. That's where we actually, entertain questions. All of our premium members are able to ask questions at any time. I'm in our premium community every day, answering questions, sharing charts that look interesting, nurturing people along in their journey to more mindful investing. So if you'd like to have more education on technical analysis and behavioral finance, access to premium institutional quality research and analysis, and also access a community of like-minded investors, please consider our Market Misbehavior Premium membership. You can get more information at marketmisbehavior.com/premium. Don't forget to use the code podcast when you check out for 30% off your first 12 months on any plan. Thanks again for joining me on the show today. I'm Dave Keller with Market Misbehavior, reminding you, as always, it's always a good time to own good charts.